The agricultural sector, one of the most critical industries in the world, is facing an underinvestment crisis that could lead to significant repricing in the years to come. The food on our tables, the fertilizers that boost crop yields, and the very lands that sustain human life are all tied to a sector that's becoming increasingly unstable. What most don't realize is that these disruptions are not due to climate change, as the mainstream media loves to claim. Instead, they stem from misguided and aggressive climate policies, geopolitical turmoil, and protectionist strategies that are quietly fracturing the global food system. Today, we're diving into agriculture and fertilizer stocks, how an undersupply in the energy markets is leading to a crippling undersupply in food production. We'll explore the impact of environmental policies, broken supply chains, and why this could be a prime opportunity for investors willing to take a contrarian view. This video is produced by the team at Capitalist Exploits. Headed by professional asset managers Chris McIntosh and Brad McFadden, the team hunts for deep value assets that are surprisingly contrarian despite strong fundamental cases for potential future appreciation. If you're looking to gain access and insight as to the personal investments of active hedge fund managers and in-depth reasoning as to why they've invested in the assets they're sharing, check the links in the description below. You'll get access to advice on how to allocate, organize, and think about your portfolio while joining a growing community of people thinking outside of the box. Enjoy monthly updates, open Q&As, regular newsletters, a community forum, organized portfolios, investing education videos, and more with the Capitalist Exploits Insider subscription. If you're not ready to fully take the leap, we also offer the Capitalist Exploits Insider newsletter series for $1 for the first 30 days and $35 a month thereafter. Do note, our investing strategy and philosophy can deviate a lot from the mainstream. We offer a money-back guarantee regardless, but make sure you're on board with our investing philosophy and global outlook before deciding to join us. Let's begin with the concept of global food security, which has been shattered by a range of factors over the past few years. From COVID-19 to geopolitical conflicts, supply chains around the world have been exposed as highly fragile and inefficient. Think back to the pandemic. Lockdowns and insane government policies surrounding the virus, labor shortages, and transportation restrictions led to unharvested crops, crop losses, and serious food deficits in many countries around the world. It wasn't a blip on the radar. It was a wake-up call. Countries quickly realized they were too reliant on global trade to secure their food supply, and this has led to a wave of food protectionism. Major exporters like Russia and India have imposed restrictions on critical exports like wheat and rice to prioritize their own food security. This protectionist wave is tightening global supplies and driving prices higher, giving local agricultural producers an unexpected advantage. On top of this, we're seeing a broader trend of deglobalization. Countries are looking inward, focusing on self-sufficiency, particularly in food production. For investors, this shift toward localized food production is creating opportunities in regions with abundant natural resources and undervalued agricultural assets. If you pay attention, this is where smart capital is being deployed. Now, let's talk about agriculture in the context of inflation. In a world where central banks are printing money at unprecedented levels, inflation is eating away at purchasing power. For investors, this is where agriculture commodities and fertilizer stocks come into play. They're your hedge against monetary debasement. Why? Simple. Food is inelastic. People need to eat, no matter what happens to the currency. As inflation rises, so do the prices of agricultural products. This makes agriculture one of the best places to park your money during times of economic turbulence. And it's not just food. Fertilizer prices are also closely tied to energy prices. The higher oil and gas prices climb, the more expensive it becomes to produce fertilizers, driving up food prices even further. Agriculture is one of the themes over at Capitalist Exploits Insider, and the stocks we've collated into our portfolio are stocks we believed are perfectly positioned to benefit from rising input prices and growing food demand, making them attractive long-term plays in this inflationary environment. But it's not just about inflation protection. To truly capitalize on this sector, we need to look at one of the most tangible and valuable assets in agriculture: the land itself. In an era of rampant monetary debasement and increasing demand for food, owning land is becoming one of the smartest long-term investments you can make. In regions like South America, especially in Brazil and Argentina, land is significantly undervalued compared to the United States or Europe. The soil is fertile, the climate is favorable, and the cost of land is relatively cheap. That's why you're seeing more and more institutional investors looking to snap up farmland in these regions. Not interested in managing farmland yourself? Agriculture-focused REITs, real estate investment trusts, offer an alternative way to gain exposure to this undervalued asset class without the complexities of direct farm management. These REITs allow you to benefit from both land appreciation and the income generated from farming operations. As global populations grow and food demand rises, agricultural land will become even more scarce and valuable. This is a long-term play, but it's one with massive upside potential for investors who get in early. Now, let's address a topic that's often misrepresented: environmental regulations and their effect on agriculture. Contrary to what the mainstream media would have you believe, it's not climate change that's threatening food production, it's misguided climate policies. Let's take the EU Green Deal as a prime example. These climate policies are forcing farmers to cut back on essential inputs like nitrogen fertilizers and pesticides, which are necessary for maximizing crop yields. The results? Higher production costs, lower yields, and ultimately higher food prices for consumers. Even worse are the restrictions being placed on fossil fuel use, particularly in Europe. Energy is the backbone of modern agriculture, from running farm machinery to producing fertilizers and transporting goods. As energy prices rise due to environmental policy, the cost of producing food becomes increasingly unaffordable. And this isn't just a European problem. These same climate-driven policies are affecting farmers all across the Western world. The bottom line is that these environmental initiatives are creating inefficiencies and driving up costs in an already strained food production system. For investors, however, this is creating opportunities. The inevitable rise in food prices, we believe, could very well reprice agricultural assets, rewarding those who see the writing on the wall. But while the long-term case for agriculture is clear, it's not without challenges. One of the biggest hurdles this industry faces is the volatile nature of the market and the unpredictable forces that can cause dramatic price swings. The agricultural sector is known for its volatility, whether it's weather patterns, geopolitical disruptions, or shifts in global trade. But here's the thing: volatility creates asymmetric investment opportunities. Agricultural commodities, fertilizers, and food producers can be decidedly volatile in the short term, but if you look at the long-term trend, it's clear. Global food demand is rising and supply is tightening. This is the kind of setup that presents asymmetric risk-reward profiles, where the downside is limited but the upside potential is enormous. For example, fertilizer prices are closely tied to oil and gas prices, and as we've discussed in this video and others, energy markets are facing severe underinvestment. This means fertilizer stocks are likely to rise in tandem with energy prices, providing investors with a bullish outlook in both sectors. In fact, we see fertilizer stocks as a key way to express a bullish view on fossil fuels. As energy markets remain undersupplied, the cost of fertilizer production will continue to rise, driving up food prices and making agricultural stocks and commodities an attractive investment. Now, let's quickly talk about how geopolitical factors are reshaping the agricultural landscape. When you think of agriculture, you might not immediately think of geopolitical risk, but the truth is, the two are closely intertwined. Take the Ukraine-Russia conflict, for example. Ukraine, often referred to as the breadbasket of Europe, has seen its grain production severely disrupted due to the war. This has depressed agricultural asset values in the region. However, for shrewd investors, this presents a chance to buy distressed agricultural assets at a discount. To give an example, if the conflict stabilizes or resolves, companies like MHP, a major Ukrainian agricultural producer, could see a sharp rebound in valuation. Then there's the broader trend of geopolitical supply chain shifts. Sanctions, trade wars, and export restrictions are creating openings for other regions to fill the gaps left by major exporters. For investors with a global perspective, understanding how these shifts affect food production and distribution can lead to lucrative opportunities in regions that stand to benefit from these disruptions. And lastly, while we fundamentally disagree with the overhyped narrative of climate change being a major threat to agriculture, we do recognize that technological innovation is crucial for improving agricultural productivity and meeting rising global demand for food. Technologies like precision farming and biotechnology are revolutionizing how food is produced. These advancements are essential for increasing crop yields and combating the inefficiencies introduced by overregulation and bureaucracy. Investing in companies that develop agricultural inputs, such as seeds, fertilizers, and advanced machinery, will be key to driving higher crop yields and meeting the global demand for food. For investors, this means targeting stocks and sectors that stand to benefit from the technological arms race in agriculture. In summary, we believe the agricultural sector is on the brink of a massive repricing. With food supply chains under pressure, energy markets undersupplied, and climate policies driving inefficiencies, the fundamentals are pointing to one conclusion: higher food prices and a bull market for agriculture and fertilizer stocks. Those willing to take a long-term view and withstand short-term volatility could stand to benefit from the inevitable rise in food prices and agricultural assets. Agriculture is one of the many themes or portfolios that we have organized in the Capitalist Exploits Insider Members section. To gain access to the specific companies we're looking at, and even more in-depth rationale about the agricultural industry and many other sectors, check out the links in the description below. The research used in this video is also available in the description below, and thank you so much for watching, and remember to stay informed.